Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Florida's chief financial officer said on Thursday his department would pull $2 billion worth of its assets managed by BlackRock, the biggest such divestment by a state opposed to the asset manager's environmental, social, and corporate governance policies. Although the move will hardly dent BlackRock's $8 trillion in assets and drew a strong response from the company, which said the action put politics over investor interests. Nonetheless, it underscores how a backlash against ESG investing is gathering steam amongst Republican leaders in Florida and elsewhere who criticize corporations for focusing on matters like climate change or workplace diversity. Republicans are set to assume control of the U.S. House of Representatives in January, and this will allow them to hold hearings on ESG and grill company executives about their policies and also pressure regulators to scrutinize them. In a statement, Florida CFO Jimmy Petronis said the state's treasury, which he oversees, would remove BlackRock as manager of about $600 million of short-term investments and have its custodian freeze $1.43 billion of long-term securities now with BlackRock, with an eye on relocating the money to other money managers by the start of 2023. Petronis accused BlackRock of focusing on ESG rather than higher returns for investors. When asked about the move, BlackRock said in a statement that they are disturbed by the emerging trend of political initiatives like this that sacrifice access to high-quality investments and thereby jeopardize returns, which will ultimately hurt Florida citizens. Fiduciaries should always value performance over politics, says BlackRock. Neither Petronis nor his office had raised any performance concerns, according to the company, adding that it has invested more than $65 billion in Florida-based companies, municipal bonds, and other securities. While BlackRock has encouraged portfolio companies to take steps like disclosing more data about their carbon emissions or adding more diverse board members, it said its efforts are aimed at improving company performance and resisted calls for steps like divesting from oil companies. U.S. Democratic officials have argued BlackRock does not press ESG concerns enough. So far, only Republican-controlled states have made major relocations away from BlackRock, including $794 million pulled by Louisiana's treasurer and $500 million by Missouri's treasurer, both in October. Other companies also face Republican scrutiny. Earlier this week, Republican attorneys general from various states asked a federal regulator to limit Vanguard Group Incorporated's activities over ESG concerns and asked United Parcel Service Incorporated and FedEx Corp to clarify their policies on tracking firearm shipments. Now that you're up to speed, hit that bell icon to subscribe and stay up to date. I'm Holly Shields for Kalkine Media.